If you own rental property anywhere in the East Bay with fire exposure, your next insurance renewal is going to look different. And it's worth understanding why before that notice shows up. Two things changed at the start of this year. California's one-year moratorium on wildfire-related non-renewals expired on January 7, 2026. And the state's FAIR Plan, the insurer of last resort, a lot of East Bay Hills owners are falling back on, is raising rates by 29.1%, starting October 15, 2026. Insurers are also leaning hard on satellite and aerial imagery to make renewal decisions now, not just occasional spot checks. Three concrete things shifted this year. First, the non-renewal shield came down. Insurers in fire-affected zip codes are no longer required to hold policies they'd otherwise drop. Second, FAIR Plan got both bigger and more expensive. The dwelling coverage cap tripled to $3 million, and eligibility expanded to rental properties up to 4 units. But that same filing raises rates 29.1%, so more owners are being funneled onto a plan that's getting pricier. Third, aerial and satellite underwriting became the default first pass for a lot of carriers' renewal reviews. That's where the real friction is. Here's the part most coverage of this topic misses. For fourplex and larger properties, insurers are now running satellite and imagery-based inspections as a routine, annual part of the renewal cycle. Instead of a clean non-renewal, owners get a notice saying the policy will be canceled in 30 days unless something specific is fixed. Most commonly, a full roof replacement, an electrical panel replacement, an earthquake shutoff valve on the gas line, or externally accessible fire extinguishers that are serviced and certified annually. The problem is timing. It's often close to impossible to get a qualified, licensed contractor scheduled and the work completed in 30 days, especially with how tight contractor demand is right now in the East Bay. In practice, that means a lot of these policies get dropped by default, not because the owner refused to comply, but because 30 days was never realistically achievable. Every owner in that fourplex plus bracket who's come up for renewal recently has seen a rate increase, no exceptions. And it's not only larger buildings. We're also seeing condos and single-family rentals get canceled off satellite imagery of the roof and yard, sometimes with no clear reason given at all, unlike the itemized notices larger buildings receive. If that happens to you, you're entitled to see the image and the insurer's stated reasoning. And it generally can't be based on a photo older than 45 days. If you do end up on FAIR Plan, remember what it doesn't cover. Liability, theft, and water damage are all excluded. Most owners pair it with a separate difference in conditions policy to actually get full coverage for a rental with tenants in it. A few concrete steps. Don't wait for your renewal notice. Ask your insurance broker for a coverage review 60 to 90 days out. If a cure notice does arrive, treat it as urgent the same day. The 30-day clock is the real enemy, not the paperwork. And loop in your property manager immediately. The bottleneck is almost always finding a contractor. And a PM with existing electrician, roofer, and plumber relationships can get a quote and a start date in days instead of weeks. To be clear, we're a property management company, not a licensed insurance broker, so we won't be the ones shopping your coverage. But we can absolutely help you beat that 30-day clock on the contractor side. If you're already holding a cure notice, or you just want a property manager who moves fast when one shows up, reach out. We'll link the full breakdown with the exact numbers and a coverage comparison table below.